The American dream home ownership sounds beautiful, doesn't it? But what if the most patriotic thing you believed turned out to be the most profitable lie ever sold to you? Let's talk about amortization, because this is where the curtain gets pulled back fast. When you take out a 30-year mortgage, the bank structures your payments so that the overwhelming majority of what you pay in the early years is pure interest, not equity, not ownership, just the cost of borrowing their money. Now here's where it gets almost darkly funny. The average American sells their home every 7 to 8 years. That means most people never even get deep enough into the loan to start seriously building equity before they hit reset and do the whole thing over again. Think of it like a treadmill designed by a financial engineer. You're sweating, you feel like you're moving, but you're essentially running in place while the bank collects the scenery. Every time you sell and buy again, the amortization clock resets. And guess who wins that game every single time? Jamie Dimon isn't buying a bigger building because your mortgage was a great deal for you. Those gleaming bank headquarters, those executive bonuses, those shareholder dividends, they are, in a very real way, partially funded by the interest payments of millions of people who genuinely believed they were building wealth. And look, homeownership isn't evil. Let's be fair and balanced here. Your home can appreciate, it provides stability, and yes, there are real tax advantages depending on your situation. But appreciation alone, especially when you factor in maintenance costs, property taxes, insurance, and interest, rarely performs as powerfully as most people assume when they run the actual numbers. The psychological piece is what really keeps this cycle spinning so reliably. We were raised culturally, almost spiritually, to believe that owning a home is the finish line, the badge of adulthood, the American trophy. That emotional programming makes it very hard to look at a mortgage statement with cold, analytical eyes. Robert Kiyosaki caught enormous heat for saying your house is a liability, not an asset. And people wanted to throw the book at him, literally, the book he wrote. But the uncomfortable truth buried in that argument is that a liability is anything that takes money out of your pocket. And for most holding periods, your primary residence is doing exactly that. Now, historically speaking, the people who actually cracked the wealth code weren't the ones who owned the nicest home on the block. They were the ones who owned the block. Real estate as a cash-flowing investment vehicle is a completely different animal than a primary residence. And confusing the two is one of the most expensive mistakes a person can make. So what's the practical lesson here? The real American dream isn't a white picket fence, it's financial freedom. And financial freedom is built on assets that produce income while you sleep, not assets that quietly drain your checking account month after month. Understanding the difference between where you live and what you own is one of the most clarifying shifts in thinking you can make. The move is to approach any major financial decision, home purchase, investment property, anything with discipline over emotion and with a clear understanding of your actual holding period, your actual cost of capital, and your actual alternatives. Position size matters too. Going all in on a single illiquid asset because it feels safe is a strategy that has quietly derailed more retirement plans than bad stock picks ever did. Here's the philosophy that ties it all together. Wealth isn't built in moments of excitement. It's built in years of boring, consistent, unemotional decisions. The person who quietly invests the difference between renting and owning into cash-flowing assets for 20 years will often out-earn the person who chased the dream house and reset their mortgage twice. None of this means you shouldn't own a home. It means you should own that decision with open eyes, a clear spreadsheet, and zero illusions about what the bank's incentives actually are. Comfort with any outcome comes from preparation, not from hoping the market does you a favor. The real power move is knowing the system well enough to use it strategically rather than being used by it. And whether that means renting and investing, buying a primary residence with intention, or purchasing income-producing properties, the knowledge you carry into that decision is everything. And if you're ready to start building that knowledge into real action, whether through real estate investing, home contracting, or connecting with the right lenders, check out our links in the description below.